Hello and welcome to our monthly economic outlook video for April. I'm Bennenbroek, international economist at Wells Fargo, and I'm joined by my colleague McKenna, also international economist at Wells Fargo. We recently published our outlook for the US economy as well as the broader global economy. And in that outlook, we continue to see a relatively resilient outlook for the US economy. Brendan, I wonder if you can sort of talk us through perhaps what are some of the themes we're seeing perhaps here in the United States as well as elsewhere, and whether we've seen any sort of significant changes in the outlook over the last month or so.
Yeah, thanks, Nick. We have seen some pretty significant changes in the global economic outlook, and I'll start globally and then I'll kind of dive down into the contributors to our more robust global growth outlook. But at a very high level, we expect more resilient global GDP growth in 2024. So we revised our global GDP forecast higher, and we're now looking for global growth of pretty close to 3% this year, which would essentially match the performance of the global economy in 2023. Now, as far as the contributors to that more robust global growth outlook, it's really being driven by two countries, the United States as well as China. As far as the US, we continue to see relatively resilient activity data. Some of the leading indicators for the consumer activity, and then also for sentiment and the manufacturing, and then more in the services sector, have continued to be resilient, and in some cases actually are bottoming out and are looking to be on a path to recovery. So we revised our U.S. GDP outlook, and we're now forecasting U.S. economic growth of about 2.5% for this year. And then as far as China, we're also starting to see some indications that fiscal stimulus deployed at the end of 2023 is starting to have a positive impact in the early parts of 2024. So we revised our China GDP forecast higher to 4.8% growth for 2024. So combined, it's really the U.S. economy as well as China that's driving a more positive outlook for the global economy this year.
Interesting. Well, thanks, Brendan. So, a little bit stronger growth globally and also, in the United States as well. Does that sort of resilient growth outlook, are there any sort of policy implications that you see potentially flowing from that as things, continue to look, perhaps a little bit brighter than they might have looked previously, at least from a growth perspective?
I think the biggest policy implications are probably on the monetary policy side, Nick. And I think when I'm thinking about U.S. economic activity being resilient, inflation maybe on a downward trajectory in the United States, I think that kind of spells an equation where the Federal Reserve is probably going to be on hold for a little bit longer than we may have previously expected. So to that point, we actually revised our Fed funds outlook, and we now forecast the first Fed rate cut to come in September, as opposed to a previous outlook for June. And then we actually think that the Fed is going to take a more gradual, prudent, and maybe somewhat cautious approach to easing monetary policy over the longer term. So our second rate cut from the Fed is now expected to come in December, and then for the Fed to take an every other meeting type of approach throughout the course of 2025. So it's a bit more of a gradual, a bit more of a cautious approach to interest rate cuts from the Federal Reserve. And I think when I'm thinking about internationally, especially in the emerging markets, if the Fed is going to be on hold and it kind of demonstrate this higher for longer approach, I think many of the central banks and many of the policymakers in the developing world will probably take a very similar type of approach. And I think that's what we're seeing in regions such as Latin America, emerging Europe, especially in countries like Chile, Brazil, and also Mexico. So I think you're starting to see the U.S. Approach to monetary policy eventually start to trickle down into the emerging markets. And a lot of, again, those policymakers take a similar approach to monetary easing. So Nick, I want to turn it back over to you. I touched on the U.S. outlook, I touched on the Federal Reserve, some of the emerging markets. What are you seeing in the rest of the advanced economies, the G10 world? Are other central banks and institutions taking a similar type of approach to the Fed, or are there some nuances on the margin there?
Yeah, thanks, Brendan. It's an interesting question you asked there, both not only from the policy side, but also the growth side. And I think what I would say is that we're seeing sort of echoes of what's happening here in the United States in other major economies like the Eurozone, for example, United Kingdom, and to a lesser extent, Canada. You did mention sort of the resilient or stronger growth outlook that we see in the United States, for example. Now, in the case of the Eurozone or the United Kingdom, we haven't revised our growth forecasts up this month. They're steady at sort of, in the United Kingdom, we're looking at 0.3% growth. In the Eurozone, they're looking at a 0.6% growth. But having come off essentially stagnant or even recessionary conditions in some cases late last year, that still masks the fact that we're going to see, something of a recovery from these European economies as this year goes on. And certainly what I would say is that if one looks at the sentiment surveys, they are improving across the Eurozone and across the United Kingdom as well. So not necessarily an upwards revision to the growth outlook that we're seeing internationally, but certainly I think more confidence that that recovery is coming with that improving sentiment, and indeed as household income trends improve as well. And then the other thing I would say, flowing on from that, just economic trends that not quite as sturdy as we see here in the United States. And also when one looks at sort of the inflation concerns, yes, there are some lingering inflation concerns, especially on the services side in places like the Eurozone, United Kingdom, and Canada as well. But overall, they're probably seeing a little bit more progress towards the inflation targets. And so with all of that, with the prospect of recovery and with perhaps some inflation concerns, but not quite as dramatic as those here in the United States, we do expect that we will see a slower pace of monetary easing from some of these international central banks. Now, in the case of the Eurozone, the European Central Bank, we still expect that they're going to lower interest rates in June, the initial rate cut, but we do expect they'll take a somewhat measured approach and look for 100 basis points or 1 percentage point of rate cuts over the second half of this year. In the case of the United Kingdom, once again, we would say with the growth relatively modest and with the progress that we're seeing on inflation, still leaning towards a June rate cut, but also taking a fairly gradual approach and 100 basis points or 1 percentage point. So the key thing there is that we also see more gradual easing, those rate cuts, that percentage point that we mentioned for both the European Central Bank and the United Kingdom. It is less than we had expected previously, but having said that, the adjustment to the outlook, not quite as significant as perhaps as you had mentioned for the United States, where we have ratcheted back that rate cuts for the rest of this year to 50 basis points or 0.5%. So still would expect perhaps an earlier move and maybe even a slightly faster move from those international central banks than, say, the Federal Reserve.
Interesting. Thanks, Nick. So can you just kind of summarize what this means for global financial markets, particularly FX markets? Obviously, we've made some adjustments to our Fed funds outlook. Looks like there's also some nuances and adjustments to our G10 monetary policy outlook as well. So what does this mean for the U.S. dollar? Can we expect some enhanced volatility in the U.S. dollar, some strength, maybe some longer-term weakness? What do you think the path for the U.S. dollar is going to be over the medium to longer term?
So yes, Brendan, that's a good question, and I certainly think as we look towards the latter part of the year, we could see more currency volatility. Many of the central banks have been on the sideline in the early part of this year, but as we've spoken about, some of the international central banks could be moving by June, Federal Reserve moving by September. We're going to start seeing some divergence and also more activity from the central banks, and so I think we'll start seeing larger currency moves. The question being there, which direction could those currency moves be? We believe that perhaps we could see a little bit more US dollar strength as we've seen in the early part of this year, and the likes of the euro, the Canadian dollar, the pound, they could see some of the weakness recently just extend a little bit further. Now, why could that be? Essentially some of the changes we talked about, significant change to the Federal Reserve that are unlikely to start lowering those interest rates until September. And the likes of the Bank of Canada, the European Central Bank, the Bank of England, they're likely to beat the Federal Reserve to the punch and start lowering those interest rates earlier in June. And so because of that timing discrepancy, I think that's likely to help the dollar and sort of undercut some of those foreign currencies through until the latter part of this year. I think as we get to the third and fourth quarters, that's when things could change a little bit, and we could still see some gradual US dollar depreciation from late this year and into 2025. Essentially we think that the growth performance of the US relative to some of these other major economies could become more similar as we get towards the end of the year. And by that stage, late this year, we could see the Federal Reserve join that monetary easing party, cutting interest rates alongside many of these major central banks and indeed emerging market central banks. And as that happens, we think we'll see some modest US dollar depreciation. So there are some of the key themes that we're seeing over the course of the last month or so. Still a resilient outlook as far as the global economy is concerned. Some of the Central banks are likely to keep interest rates a little bit higher for a little bit longer than we had previously anticipated, which could also see the US dollar remaining stronger for longer as well. So we'd like to thank you again for joining us today as we've shared some of the key themes as we see it in terms of the global economy, and wish you well and success as you continue to move forward. Thank you very much.